Ladies and gentlemen, welcome back to another episode of Blockchain Boss, your favorite Web3 podcast. I am your host, Bon Jenn. It is such an honor, such a pleasure to be your host today, to be kicking back on another Monday, talking about some cryptocurrency, some blockchain, some Web3, some metaverse, all that good stuff. I feel like it's going to be a great episode. I want to thank you once again for logging in. Hope you had a great weekend, and I hope you have a great week. If you're new to the show, Blockchain Boss is pretty much everything I just said. We just kick back, talk about some market news, talk about some Bitcoin, cryptocurrency news, a little bit of education here and there. It's just just like hanging out, kicking back with your friend who knows a lot about crypto and who wants to share some information with you. Like I said, my name is Bon. You probably know me from TikTok, the guy that sits on the couch and just explains crypto stuff. I'm also on YouTube, just hit 1,000 subscribers, so thank you everybody for subscribing over there. And I also have a newsletter where I send out weekly cryptocurrency and blockchain related research. And you can hop on that at bonjenn, BONJENN.io, 100% free. Okay, so without further ado, I believe this is episode 3. We got a fresh episode for you folks today. Let me just pull up my notes because I'm super unprepared. Could this go any slower? So yeah, episode 3. We're going to be talking about a little bit of Bitcoin energy consumption today because everybody loves to bring that up. And we're also going to get into some market news before that. But first, before we get into that, we got to talk about our sponsor, Webull. Huge thanks to Webull, the stock brokerage. Webull is giving away 5 free stocks for Blockchain Boss listeners. That's right. 5 free stocks. Usually they only give away 3 stocks, but this time they're giving away 5 for the month of March only. All you have to do is sign up to get 2 stocks and then deposit money. It can even be a penny to get an additional 3 free stocks. It's phenomenal. It's literally just free money. So go ahead and sign up. To sign up, go to blockchainboss.io/free stocks. That's blockchainboss.io/free stocks. Webull is the best way to buy and sell stocks and cryptocurrency online. You can buy any stock in the U.S. stock market, along with Bitcoin, Ethereum, and various other cryptocurrencies. It also has very, very comprehensive charts where you can track your trades and very specialized tools like options trading. In order to get your free stocks, go on over to blockchainboss.io/free stocks. That's blockchainboss.io/free stocks. Thank you, Webull, for that. Giving away free money to Blockchain Boss listeners. Okay, guys, let's hop into the market. It's not looking good. We're going to start off with the Crypto Fear and Greed Index. If you're unfamiliar with what that is, the Crypto Fear and Greed Index is basically a chart which lays out the sentiment for the Bitcoin market. Right now, we are sitting at a 21 on the Fear and Greed Index scale. Right now, with all the uncertainty going on in the world, people are afraid, like I've been saying, and when they're afraid, people sell off when there's a lot of fear in the market. Now, what makes up the Fear and Greed Index? The Fear and Greed Index basically measures emotions from different sources and crunches them into one simple number. I've been using it for years. It's a very reliable source. I personally, not financial advice, only buy when the Fear and Greed Index is in fear or extreme fear, because fear and extreme fear means it's pretty low. So let's go ahead and take a look at this Bitcoin price. So right now on March 14th, 2021, I think it's March 14th. March 14th, 2021, Bitcoin is sitting at $39,561. When the federal government announced the cryptocurrency executive order last week, Bitcoin momentarily jumped up to like $41,000 before going back down and hovering around 37, 38, 39. Bitcoin has been chilling at this price for a little bit, with Ethereum chilling at $2,500. Everything else has also been in the red because, like I always say, nothing can perform well except unless Bitcoin performs well. However, for the day-to-day, a lot of these altcoins look like they're performing okay. We have BNB at $373, up 2.7%. XRP at 77 cents, up 2.3%. Terra at 8.59%. Cardano at 80 cents. Now, week over week, these things are literally getting slaughtered. Great buying opportunity, but for the day-to-day, they're looking pretty healthy. So what do I think is going to happen? And also, what is my current trading strategy for the current market? Well, right now, honestly, the majority of my money is on Bitcoin and Ethereum because those are going to be around the longest. And if there's going to be a crypto rally anytime soon, which I personally don't think there will be, those are going to be the ones to pop off first. And then all the people are going to take their profits, and all the money is going to trickle down into the smaller cap coins, like what happens with every bull market. So right now, Bitcoin is performing just a-okay for the day, and everything is following behind it, except for Cardano, which literally has a mind of its own. It looks like this could possibly be a mini bull market because Bitcoin doesn't have a lot of confidence right now. Like I said, the crypto fear and greed index is in extreme fear right now, so there might not be a recovery for a little bit. Me personally, I will continue to dollar cost average into both Bitcoin and Ethereum for the foreseeable future. I may also throw some money into some very, 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 very smaller cap coins, because we'll see what happens, because those are always fun to watch over the long term. So that's the market for today. 21 extreme fear. Now let's go ahead and hop into the news stories I want to talk about. A huge talking point for Bitcoin has always been Bitcoin's energy consumption. Ever since Bitcoin started actually using real energy, once the price became something to be respected, I would say a couple $1,000s, Bitcoin, people started talking about Bitcoin energy usage. If you're unfamiliar with what I'm talking about, a little bit of backstory. Bitcoin, how is Bitcoin created? How is the decentralized network secure? How are the transactions validated? It all has to do with Bitcoin mining. Basically, Bitcoin mining is, like I said, what keeps the network secure. So what you have are computers running the Bitcoin software. What these computers are doing is they are validating the transactions. How are they validating and they're also mining for new Bitcoin. What does that mean? So the way the software works is there's these math problems, right? And these computers, every computer in the world that's running the Bitcoin software, aka the Bitcoin network, is competing with each other to solve these math problems first. The first computer to solve the math problem is rewarded in Bitcoin. Now, every 4 years, the difficulty of the math problem doubles, right? So it becomes more and more energy intensive for these computers to solve these math problems. And Bitcoin is algorithmically programmed to have only 21 million in existence. Right now, there's a little bit more than 18 million in circulation. So as the years go on and it becomes more difficult for these computers to create Bitcoin, because it's technically harder, less and less are being mined out, the price is going up because of supply and demand. Plus, people are realizing that there's only going to be 21 million in existence. So back in the day when Bitcoin was really cheap and there were millions to be mined and it was relatively not difficult at all for a computer to do it, you could mine Bitcoin on a laptop and that would take almost no electricity. Today, these computers require lots and lots and lots of electricity because you want to have the most powerful computer in order to finish the race first so that you can be rewarded in Bitcoin. These computers are also simultaneously validating transactions as well as keeping the network secure with a consensus method called proof of work. So why is this a problem? Well, for a lot of these miners, they're using dirty energy like coal, which is really bad for the environment, obviously. In fact, this has been a talking point by many politicians who want to heavily regulate Bitcoin and limit its use. However, there are ways to mine Bitcoin greenly, if that's a word. However, a lot of it is created using unclean methods. It's also a huge talking point that Bitcoin uses more energy than a lot of small countries. But I have some research in this video to basically argue both points. I brought together some sources and I'm going to be sharing them with you in this episode. And I will be sharing my opinion at the end. This is an article from Insider.com by Eugene Kim. With increased competition, Bitcoin mining has become an industry of its own, requiring specialized machines, servers, and huge data centers with enough cooling capacity to keep the computers from overheating. Bitcoin's price has jumped nearly fivefold in the past few years, but the rapid run-up is leading to significantly higher energy consumption for the popular cryptocurrency worldwide. That's largely because most people are competing to mine Bitcoin, a process that involves solving complex mathematical problems that help verify digital currency transactions. Miners who solve these problems receive a share of Bitcoin, and as more people compete to mine them, the more energy it takes. It's difficult to measure exactly how much energy Bitcoin mining consumes, but a new analysis by the New York Times shares some staggering data that puts the energy use in perspective. Bitcoin mining consumes about 91 terawatt hours of electricity annually. That's more electricity than all of Finland, which is a country of 5.5 million people. That's almost 0.5% of all electricity consumption worldwide, and a 10 times jump from just 5 years ago. That's about the same amount of electricity consumed in the state of Washington each year, and more than a third of electricity used for residential cooling in the U.S. annually. And it's more than 7 times the electricity used by all of Google's global operations. For those who have been following the Bitcoin and broader cryptocurrency space, the environmental impact of mining has long been a problem to reckon with. Iran was rocked by power outages earlier this year that were partly blamed on Bitcoin. In March, Bill Gates warned that Bitcoin was not a great climate thing, and U.S. Treasury Secretary Janet Yellen has called its energy use staggering. In response, some asset managers are looking to address crypto's environmental concerns. Michael Haynes, a senior managing director at an alternative investments platform RealBlocks, previously told Insider that asset managers are becoming increasingly aware of crypto sustainability issues. So as you can see, Bitcoin mining has some problems, obviously. But I mean, when you have a decentralized monetary network, security ain't cheap, This is from the New York Times by John Huang, Claire O'Neill, and Hiroko Tabuchi. Today, you need highly specialized machines, a lot of money, a big space, and enough cooling power to keep the constantly running hardware from overheating. That's why mining now happens in giant data centers owned by companies or groups of people. In fact, operations have consolidated so much that now only 7 mining groups own nearly 80% of all computing power on the network. The aim behind quote-unquote pooling computing power like this is to distribute income more evenly so participants get $10 rather than $50,000 every 10 years, for example. Mining happens all over the world, often wherever there's an abundance of cheap energy. For years, much of Bitcoin mining has been in China, although recently the country has started cracking down. Researchers at the University of Cambridge have been tracking Bitcoin mining and said recently that China's share of global Bitcoin mining had fallen to 46% in April from 75% in late 2019. Meanwhile, the United States share of mining grew to 16% from 4% during the same period. Could it be greener? What if Bitcoin could be mined using more sources of renewable energy like wind, solar, or hydropower? It's tricky to find out exactly how much of Bitcoin mining is powered by renewables because of the very nature of Bitcoin, a decentralized currency whose miners are largely anonymous. Globally, estimates of Bitcoin's use of renewables range from about 40% to almost 75%. But in general, experts say using renewable energy to power Bitcoin mining means that it won't be available to power a home, a factory, or an electric car. Bitcoin mining means more than just emissions. Hardware piles up too. Everyone wants the newest, fastest machinery, which causes turnover and a new e-waste problem. Alex DeVries, a Paris-based economist, estimates that every year and a half or so, the computational power of mining hardware doubles, making older machines obsolete. According to his calculations at the start of 2021, Bitcoin alone was generating more e-waste than many mid-sized countries. People love to bring up the country thing, and that sounds really bad on the surface, But like I said, a decentralized monetary network that's outside of the control of any government, that kind of sounds worth it, but hey, that's just my opinion. I'm just a guy with a podcast. What the hell do I know? Now, of course, we got to read both sides because, there's both sides to every argument. But before we do that, let's read a quick ad. This portion of the podcast is brought to you by Coinbase. Our friends over at Coinbase. Coinbase is the easiest way to buy and hold and send cryptocurrency. I have been using Coinbase for years personally. It also has a great graph to track the progress of your account over time. It's super easy. They also have other products like Coinbase Pro, which is an exchange instead of a brokerage where you're actually trading peer-to-peer instead of from a centralized brokerage, which is Coinbase, or Coinbase Wallet, which is a non-custodial wallet where you have your private key and you are truly in ownership of your crypto. I personally purchase my cryptocurrency on Coinbase and shoot it over to my Coinbase wallet for extra protection. Right now, Coinbase is giving away $5 free of Bitcoin, literally $5. So I gave out money with the stocks with Webull at blockchainboss.io/free stocks. Now I'm giving away $5 in free Bitcoin just for signing up for Coinbase. So head on over to blockchainboss.io/free Bitcoin to grab yourself some free Bitcoin. That's blockchainboss.io/free Bitcoin. Thanks to Coinbase for that. Back to the show. Alrighty. We were talking about Bitcoin energy consumption, saying all the bad things about it, why everybody's complaining about it. A decentralized monetary network being a huge energy sucker. But you know what else is a huge energy sucker? Even more so, even more than double so, is the banking system. This is according to Nasdaq.com, written by a guy named Namzios. I was scratching my nose, by the way. I wasn't picking it. Let's hop in. By the way, Galaxy Digital is a Bitcoin holding firm. Full disclosure, because they mentioned that in this article. I don't know if they mentioned it in the article, but like I know that, so I'm telling you. They probably should have disclosed that. But yeah. So a recent study from Galaxy Digital, Bitcoin holding firm, they're like in the top 10, I believe, of the most owned Bitcoin in the world. Like 3 or 4, I think, could be wrong. But yeah, a recent report from Galaxy Digital found that the Bitcoin network consumes less than half the energy consumed by the banking or gold industries. A recent released research report from Galaxy Digital was calculated the energy consumed by the Bitcoin network and then compared it to other industries, including the banking industry. It found that Bitcoin consumes 113.89 terawatt hours per year, while the banking industry consumes 263.72 terawatt hours per year. The report put Bitcoin's energy consumption into perspective by distilling some of the unique characteristics of Bitcoin and how they relate to the impact of its energy consumption. Quote, Bitcoin is a fundamentally novel technology that is not a precise substitute for any one legacy system, according to the report. Bitcoin is not solely a settlement layer, not solely a store of value, and not solely a medium of exchange. There is no denying that the Bitcoin network consumes a substantial amount of energy, but this energy consumption is what makes it so robust and so secure. End quote. Galaxy Digital compared the Bitcoin network's energy consumption with that of the banking system as well as the gold industry, since the largest cryptocurrency is often compared with the two. The report found that the banking and gold consume 263.72 terawatt hours per year and 240.61 terawatt hours per year, respectively, while Bitcoin consumes much less energy, 113.89 terawatt hours per year. According to the report, oil fields currently generate about 40% of the world's energy. However, they also frequently produce methane as a byproduct, whose greenhouse effect are 25 times more environmentally damaging as those of an equivalent quantity of carbon dioxide. Quote, Bitcoin mining offers a solution, the report suggested. Companies like the Great American Mining, Upstream Data, and Crusoe Energy Systems are building infrastructure to capture this methane at the wellhead and use the otherwise wasted gas to mine Bitcoin. This means the oil producers can ensure a 24x reduction in emissions compared to venting that methane into the atmosphere. So Bitcoin uses less energy than banking and gold. That's very interesting. But I wonder what else Bitcoin uses less energy than. Let's continue reading. This is from medium.com by someone named Lucas. So here's the thing about Bitcoin. It uses a lot of energy, but is it a good use of energy? Like, in my opinion, it is. However, lots of people don't think so, because I truly don't think they really understand the essence of Bitcoin. If they understood what the energy is being used for, the essence of it in terms of being able to store value outside of anyone's control but your own, it's actually priceless when you think about it. This is from medium.com by Lucas. Let's see what he thinks. Generally, the argument comes down to whether you think Bitcoin is a good use of energy or not. This is subjective, and as you'll see, there's lots of uses of energy that some may classify as more wasteful than a global decentralized money network. Bitcoin uses 0.6% of the world's electricity consumption. Certainly a lot, but I'm sure the alarmists would have you believe it's much more than that. Bitcoin consumes more energy than Argentina, Ukraine, and almost as much as Sweden. Yes, this is true, though this energy is used to secure over $1 trillion in value. When compared to the GDP of these countries, it makes for a less sensationalist headline. Argentina at $445 billion, Ukraine at $154 billion, and Sweden at $531 billion. If you wanted to make a point with this data, you could cheekily say that Bitcoin is 2.24 times, 6.49 times, and 1.88 times more efficient than these nations. Damn, shots fired. Adding to the above, China, the world's largest consumer of energy, currently uses 49.5 times the energy of Bitcoin despite only having a GDP 14.3 times of Bitcoin's market value. Now for a few comparisons of energy use around the world, Daniel Barr made a rough calculation comparing Bitcoin's use of clothes dryers. He found that dryers in the USA alone add to 72% of Bitcoin's energy use of 130 terawatts per year. Clothes dryers are arguably a modern day comfort feature that you can use zero electricity to dry your clothes by hanging them out in the sun or even inside and waiting a little longer. Another arguable comfort feature of the modern world is air conditioning. We're not talking about heating or refrigeration, as they are arguably necessary for modern day survival. There's no doubt we use excessive air conditioning in our mega offices and shopping malls to keep us slightly cooler than otherwise. This air conditioning uses a vast amount of electricity. In fact, it's roughly 10% of the world's total energy consumption. That's 2,231.5 terawatts per year. This is even more so a waste than when you realize humans have survived and thrived through millennia in many hot climates without air conditioning. It's even more possible to live without it today if we focus on building well-designed structures using a variety of methods to keep the inside cool without electricity. That is thoughts from Lucas from Medium.com. I thought those were very interesting points concerning the countries. The fact that Bitcoin is using less energy but has a bigger GDP than a lot of the countries mentioned. I think that's a very good talking point. I think that's something to be considered. Why is a global monetary network more efficient than some of these countries? Because it's a global monetary network that's outside the control of anyone. And once people realize that, it's going to be worth way more than $1 trillion. Now, I got to say right now it's not worth $1 trillion. I think $1 trillion is something around $55,000 a coin, but we can easily get there again. Anyway, I think that's all I have for today's episode. I would love to know your thoughts on Bitcoin energy consumption. Do you think it's a good use of energy, a bad use of energy? Do you think it's better used for something else? Do you think all of this is more larky? All these articles will be in the description. If you enjoyed the show, please be sure to subscribe on YouTube. Follow the podcast on Spotify, Apple Music. My name is Bon Jenn on everything, BonJenn. Find me on Twitter. Find me on Instagram. Find me on TikTok, YouTube. And be sure, please join my free weekly newsletter at bonjen.io. Every week I send out free blockchain, Web3, cryptocurrency research that I love to share with you. So go ahead and check that out. Thank you for listening, and I'll catch you next week. Peace out.